All of us work for companies large and small, sometimes in senior positions, sometimes in entry-level positions, and sometimes at board and leadership positions. One common function a business idea along with finance and human resources is converted into business is risk management. Should always meet the test of not gambling away your resources. Compliance, governance, and risk management are the key themes which both McKinsey and Gartner have put ahead of all other things such as transformation, expansion. So why corporate governance is important is enshrined in a number of pronunciations, both legislative and non-legislative. It is essentially to give shape to many streams of risk management or many streams of keeping things under control. As I sit on various boards and chair audit committees, one thing that is now being flagged to me is governance is very important. Everybody knows about it, but unable to understand the key processes in governance. Today we speak of audit, and more specifically about internal audit is one of the key processes of governance. When we speak of risk management, there are three aspects in a corporate setting or in a company setting which everybody must understand. There is a framework or what we call a set of rules and guidelines for everybody to follow. This is called the first line of defense. Second, there are a set of controls. And these controls are the methods in which everything is organized together and all moving parts are put through a process of discipline. The third line of defense, of course, is the audit, a post facto analysis or an ongoing analysis after things have happened to test whether the framework and the controls are working properly, and if no, set in train a method of escalation, a method of reporting, and method of documentation. Ultimately, the controls, the processes, the business idea validity is tested in companies through the audit committee of the board. Audit committees of the board has been now recognized world over as the most critical part of a board governed entity. In India, under the listing obligation and disclosure requirements, there is a set of necessities regarding audit committee and their scope. Probably we will discuss it sometime later in Mahapatran's form, but for today, what we are going to understand is that audit committee as the highest committee. As some of you might know, all listed companies must have an audit committee. In the companies which are not listed, if it is a public company, then there is a 10 crore and 100 crore test. If the paid up capital is more than 10 crores, or if the revenue is more than 100 crores, mandatorily there must be a audit committee. Simultaneously, any company, listed, unlisted, privately held or publicly held, the moment the borrowing is more than 50 crores or it has deposits of more than 50 crores, then there must be an audit committee. So why this so much of brouhaha about audit as a function? Many times audit is misunderstood as a nuisance, as somebody who is too bureaucratic, not allowing the business to work. But we must understand that audit is not only critical, audit also ensures that the stakeholders' interest is continuously protected. Risk assessment as the foundation of audit must be appreciated by all of us. How this is done? The first one is information gathering and analytics, identification of processes, sub-processes, and their documentation are critical parts of risk assessment. Analysis of the business plan so that understanding the business flow documenting business flow and finding out where risk could occur and where controls are necessary and controls are working or not. Then, of course, the audit works through one important process called management discussion. Audit is not that a set of things have happened and an auditor or a firm comes and does only post-mortem. It is a continuous process, especially the internal audit, where management discussions are key to identifying the risks, controls, and their management. Next important thing that is looked in audit, prior audit and open issues. For example, when we were in banks, if there is a repeat observation, if there are open issues which has not been addressed effectively by the management, by default it is considered a risk which could impair the value of the enterprise. One important part is determination of the audit cycle. How frequently one particular subject or one particular issue will be examined for its framework and control. Of course, there are legal and regulatory requirements, compliance requirements, which makes internal audit scope or the universe through which internal audit will examine the functions of the company that more comprehensive. In case of internal audit, one important aspect which is called inherent risk assessment. It depends on industry, it depends on location and likelihood of the occurrence of a particular event, whether it is operational risk, whether it is financial risk, whether it is brand risk, whether it is reputation risk, what is the likelihood of it happening? That is determined so that it is synchronized with audit cycle and the audit documentation and management discussions. Other thing that we must remember is the sample collection. If internal audit has the ability to look at the entire operation, it will not only be time consuming, it will be inefficient and it will be expensive. What is a representative sample to examine a particular risk is very important part of internal risk. Interviews and interactions, as I told, not only just with management, with sample stakeholders like bankers, like customers, is an ingredient and essential embedded part of internal audit. So if your auditor is doing all these things, talking to people on phones or talking to board members, it is part of their function. Creation of audit evidence, because audit cannot say that we found like this. Auditors are liable to be challenged, not just in the board, but by the regulators if something goes wrong. Creation of evidence is equally important because all the observations in audit which the management is legally bound to address must be supported by documents and evidence. These documentary evidence could be one way of creating evidence, but there could be physical evidence, testimonial evidence, analytical evidence. Based on somebody speaking or based on data that is available from the servers, from the analysis part, that also could be an evidence. Last, report writing, sequencing, justifying and defending that report. Report writing goes through many phases. Draft report, which generally goes to the senior auditors or senior finance persons. Then it is finalized, that is presented to the board committees. It goes into records which cannot be destroyed periodically. Audit records are generally preserved for perpetuity because audit records are important evidences in courts of law, in case of regulatory requirements such as SEBI. In AGMs, the audit committee chair is supposed to be present and tell the shareholders what exactly is the status of the health of the company. So audit, it may seem to be intrusive, it may seem to be bureaucratic, is not only essential, but is very important that all of us working in corporates, working for corporates, advising corporates, or on the board of corporates must understand in some detail in order to not just function efficiently, but be part of an efficient ecosystem. Thank you very much.